Hello guys, welcome back to another lovely trading stream. This one's a bit different. We're going to be trading the Fomc release live. We can see it's released in 2 minutes from now. So this is going to be the key thing to be watching. Again, this makes markets move crazy. So for this, we need to be having quick data. Don't have Squawk currently loaded up, so we are just going to have to be doing it hopefully off Twitter news. And hopefully this will release everything on time. We can kind of see we are coming into a key level into this data. We're going to be trading it on SPY. I do have Tastyworks ready because this is where I commit my orders. But yeah, the key thing right now is 384. This is what's considered the bear market line. That is a 20% seller from its high. When we're above this, we're still considered a bull market. When below, a bear market. So it's interesting that we came here today when we're moving off this news. So on the left we have the 5 minute, on the right we have a 1 minute chart. Let's quickly get the data back up, and the contracts I'm looking at are the ones that expired today. And really I'm only looking to have like a low amount of risk, because again this can fly quite easy, so I'll be only looking to have a small amount. Probably look to trade the 80 on the if we're getting calls, and going down to the 75s if we're looking at the puts. So again, just waiting for that release to come out. It's probably good. Actually, I might not be able to have the order screen on just because we can have that ready on market. Just because I don't have enough screen space on the one we're going to be streaming, but I will pop it up when we start to move. So again, should have just released. We're not seeing that quick movement. Just waiting for any releases to come through. Looks like we're spiking to the upside. Again, we want direction to be a bit more clear. Okay, again, this is why you don't trade instantly. You're going to get faked out. Again, we're just waiting for anything. Interest by 75. Okay, so this was expected. 75 basis points was expected. So the way I'm going to be trading this is then we need to go to the FOMC statement, because the statement is what's going to be key. What this is going to show, and from our kind of side, it's going to be hard to get the information quick enough. So instead, you kind of want to see direction play out, and we can hop on it. Okay, that's not working, because what you want to see is when they're looking to taper. Determining the pace of rate hikes, we will consider cumulative tightening policy lags and economic. The market is taking this as bullish. Again, this when you just jump on long. Okay, there we go. We are filled. Starting to pull back. That's all fine. Again, just have my market order ready to get out. Again, it's just going to be a quick in and out scalp. And again, you just kind of wait for that slowdown. On the 1 minute, we're still popping. Okay, that looked pretty decent position. Let me quickly show you the fill. Okay, so here we traded that quite successfully. We made a pretty decent amount. As you can see here, don't really want to get, does it matter? I'm trying to see if there's, okay, no, all the information there is fine. Okay, cool, here you can see we traded that SPY live. Again, we don't have the institutional data. So like right now I have been doing a internship. We have been having the live data. You know, we've got all the Reuters, we've got the Bloomberg terminals, you got the Squawk. When you have that, it's a lot easier to trade this data because you're not looking at things just like literally a tweet deck. So we were able to trade this directly. We were able to get the fill. You can see we bought it 140, 150. I mean, that's a nice scalp. Again, nothing crazy, but again, we're trying on limited news, and that's the problem always trading on the retail side. You don't have all the information, and it takes you longer to get it. That's why we kind of just had to sit there patiently. We saw it moving, but you don't want to be jumping on it right away, because again, there's a lot of fake outs. We saw it spike to the upside. Yes, cool, if you bought it long term you would have been fine, but that was a big downturn, especially if we were holding that option. We could have easily bought that at say 150. It dropped down to 110, 100. That would have been quite scary if you're in long, probably something we would have closed out on. Again, losing 40% of that position really quickly, not something we're going to be looking to hold. So really, again, just get in for that quick in and out scalp. Again, if you got more the institutional side, you can see more of the information. It would have been easier to play longer term, but again, limited. And again, I only really just got back in, so didn't have time. I just got back from the office, so didn't have time to properly set up and prepare for this trade, where it was literally I sat down maybe 3 minutes, or literally as soon as the stream started up, and just got ready to trade it. So it was more just getting in for the quick in and out scalp. But again, these are the kind of trades that you can literally make. We have them 8 times a year. You can make all your money you need during those times. And the one way you can look to trade these, at least how we've been seeing previous news releases, I mean, if you saw the ADP employment change today, you can be tracking this trade quite easily on the 1 minute. Lock in profits as soon as that first minute candle closes. You can see it does push usually to that high. Sometimes this is when they start to pull back. Other times, in this case, it continues to run. But that is usually a good area if you've got more than one contract, just to start locking some in, and then let it run that bit more. And again, just keep kind of locking them in. As of right now, it seems to be 1 to 5 minutes is the majority of the trend. But yeah, so that was definitely interesting to see. But again, we were kind of, this play would have played out a lot better, and I would have held it a lot longer if it was to the downside. Now, the reason for that is, again, we had that bear market line here. So coming through here, you're going to have this initial bit where probably a lot of stops are going to be triggered. You'll kind of fly through here. But overall, the market is bearish. And again, it's still not great news coming out. So overall, if this news was bearish, it would have been a lot of a smoother play. You can see we have basically just 2 strong candles. And let's kind of quickly see how much we jumped. So we jumped about 1% on this move, and now we're starting to relax already. And again, there will probably be a trading opportunity. We're starting to see it calm down. If we break over that 388, probably a good sign that we push to the upside. And again, kind of just look at the momentum. If we break back below this, there's probably a good indication that we will kind of snap back down. One thing I did want to kind of look at, again, I didn't even have enough time to plot these lines. Okay, there's a lot of lines on here for some reason. So 384 was that bear market line. We can just clear all these and just replace that key bear market line. So if we quickly place this, just do purple again. I want it to stand out just because it is a key one to be paying attention to. But it was more, if we go into a shorter term time frame, where are our levels? So if we quickly go into a 20 and 30 day chart, we can see, okay, this is why we need to be prepared. Again, I didn't have time, I only just got back in. But this would have been that good indication depending on how you play. If you were looking long, that is really where my first target would have been, going on to those shorter term time frames. 30 day and 20 day seem to be the sweet spot on the standard deviation side of things. Playing it to those levels, and then again locking in profits from there, would have been able to get a lot better move on that. And again, that's where you can sometimes flip the move as well. If you start to see momentum weaken, again, that's going to be a lot more risky if you're looking to flip it short. I wouldn't do that from the option side, just because of, again, when you're trading options, your spreads are usually at least a few dollars. So it just takes on a lot of extra risk. If you're trading it with futures, you're trading it with shares, that would be a lot easier to be able to play this reversal, because you can place it there. If it snaps through the whole dollar, get out. So you're risking 20 cents. You've got a lot of upside on that. And that's another way. Again, the only thing we can do right now is observe. Every time we have these meetings, yes, these ones are going to be a lot more volatile because inflation is so key right now. But it is key to be watching these live, because again, observing how they react, how far is it moving. Okay, we're breaking to the upside again. We actually need to break over that whole dollar. If we break over that 38 again, watch, we will probably snap. So again, 38, we kind of tapped it. We haven't broken through yet. One thing I wouldn't mind doing is placing an order at 01 and just getting that quick scalp high. Because again, if we pop through there, we could easily do a nice 50 cents on the SPY. If we go over to the ES future, again, you're looking at the same thing really. You can see actually on here you might have got faked out, because it did go about 1 tick above, and now you're kind of getting that fake out. So again, that's why you got to be careful through these. Again, we haven't really broken through. We're paying attention to the SPY, because again, this is more of a stock trading focused channel. But if you pop through that level, again, expect a continuation move. We did pop that, and again, we haven't really move too far out. So what this is telling me instantly, because especially if you're looking at the ES futures, so the S&P futures, it kind of faked you out that side, then faked you out that side. So this is just showing me I would be patient. It seems like we're forming more of a flag right now. I would probably be waiting for us to move then quite a bit further out, maybe on the future side, 3902 to the long side, and if we kind of break probably 80 to the downside, then we'll probably snap in that direction a bit further. But right now it just looks like you're going to be getting faked out if you're trading this. Anyway, I'm going to have to cut this stream short. I just wanted to get this live because, again, these are going to be the key events. Good to document it either way. Again, I like to have it live stream so I can come and observe it, see as well what my thought process was going through it. How can I improve for the next one? Because, again, these are the trades that can change your life. Technicals will pay the bills. News will get you, well, basically you can kind of think of it, and saying you're always getting the trading side of things is the technicals will pay your mortgage. Fundamental and these kind of news trades will pay off your mortgage. So that is the breakdown for the video. Again, I got to head off, just had to make sure I was here for the event. Again, a big event, you've got to be here to be able to trade it. But again, this is what was key. One last thing again, because I'll be watching this video back so I can learn from it myself, and recap on what happened. So what we saw, it snapped up beginning, came into this this is on the 5 minute, the 200 EMA, snapped back down, fake down to the other side. Now this was key to note because I kind of lost my chain of thought now. But oh yeah, this was key to note because what we haven't seen recently is actually fake outs. If you saw the employment change data today, it didn't fake you out. So seeing this, again, it was a bit different, could have got faked out depending on how you traded. Anyway, that is the stream. Hope you enjoyed.